Hello, everyone. This is Martin, and I've produced a short video here on what I think is probably one of the most important topics when it comes to trading. And it may even be a little bit controversial, but the title of my video here is "How to Become a Better Trader Instantly." Okay, so again, this is copyright 2016. This presentation cannot be copied or reprinted for any reason without express written permission by the author, which is me. So, anyways, hope you enjoy the video. Hopefully, you will learn quite a bit. Some of the information may be pretty basic, what I'm trying to do is explain a topic or an important facet of trading that is that some people may think as being a little bit complicated, but I'm trying to explain it in very simple terms. The most important thing being that it is absolutely important and critical to your trading success. So let's start. And the very first thing is how to become a better trader. To become a better trader instantly, there are two radically different approaches you can take. One, become much better at what you are doing, keep improving, but this takes time. I'm sure you're going to agree with me that it does take some time to become a better trader because you may be experiencing issues with entries, incorrect entries, incorrect take profit targets, incorrect stop losses. Trades sometimes seem to go against you for no reason and you can't figure that out. So trading is a process, and it's important to keep improving at what you're doing. But the second thing here is how do you become a better trader? To eliminate some major flaws in your trading, start with the biggest problem. And this is what you can do in an instant. It really is. So, what I'm saying is, take a look at one of your biggest problems, or perhaps your biggest problem in trading, eliminate that, and then go from there. Okay? Now, fact number one, most traders will lose money when they first start trading. I'm sure you all agree with me on that. I mean, I started losing money when I first started trading a few years ago, and in fact, I probably did lose my first $2,000 to $3,000 before I started being successful. Fact number two, most new traders will lose most, if not all, of their account balance. This is critically true. You may have funded your real life account, and suddenly, within a very short space of time, you may find that you will lose most, if not all, of your account balance. Okay? Now, fact number three. Most, if not all, new traders, so most traders, if not all new traders, can dramatically limit the amount of money they will lose. This is an important statement. It's this last fact, fact number three, that I want to address head on in this short video. And I want to give you a simple, quick fix solution. Okay, so this is what we're going to address. All traders can dramatically limit the amount of money they will lose. Now, this is what I have learned. The interesting thing is, I'm a teacher, a mentor to many private students. I also teach face to face in the school system here in the Toronto area. And recently, I was fortunate to meet with some of my students face to face. So this is really interesting because it's not online. As when you go online, there's lots and lots of people trying to teach forex. They have online lessons, online education. But I was fortunate to meet with at least 10 of my students face to face, one on one here in the Toronto area. I sat beside them, looked at their charts, watched them trade, and listened to their concerns. Many of my students, one on one, meeting my students one on one has helped me understand the difficulties they were having, and as a result, has made me become a much better teacher and mentor, more than anything else I have done previously. Now, there's one major flaw I discovered. The one trading flaw that was common to most of the traders I met. This one critical mistake was the primary reason why traders were losing money too quickly, much faster. And here's the key word. They were losing money too quickly, much faster than they needed to. This flaw applies to both new and more experienced established traders. Okay? The two most important rules. This one trading flaw, which I discovered while I was meeting students face to face or on a one to one basis, the trading flaw disobeys the two most important rules in trading. Rule number one, don't lose money beyond your allowable risk. Rule number two, don't allow small losses to become big, huge losses. You should all write this down, have this right beside your computer, and always look at this every single day, every single time you place a trade, every single time you finish and close a trade. Review these two rules and find out and ask yourself if you actually disobeyed these two rules, and you will quickly learn a little bit more about yourself. Ask yourself this one important question. Before I give you the best advice ever to instantly improve your trading, I'm going to give you a challenge first. Think back to your own trading experience, okay? Think back perhaps over the last 3, 4, 5, 6 months. Ask yourself, what is the one aspect of your trading that you feel has contributed to your biggest losses more quickly than anything else? Now think about this. I'll give you a moment. Okay? I mean, it could be incorrect, like you said, getting in to trade at the wrong time. It could be over trading. It could be just seeing the wrong pattern and not even getting in taking, let's say, a buy trade when you should have taken a sell trade. Getting in and trading at a time of the day that there was very little volatility, price just didn't seem to move. But think about what was the one aspect of your trading that contributed to your biggest losses. Okay? Every time you lost a big amount of money, what was the one important reason that you think that happened? Okay, blame it on this flaw. Here's the flaw. Trading with incorrect lot sizes. Now, remember, I had visited face to face and personally traded at least 10 traders here in the Toronto area over the last few months. This is what I discovered, that almost everybody was trading with the incorrect lot sizes. Eliminating this flaw will make you a better trader instantly. I promise you it will. Even if you are one of the worst traders, this critical flaw is one of the easiest to correct, and at worst, help you avoid losing most or all of your money, and that's a guarantee. Okay, so that's a really important statement. You may find it a bit controversial, but I believe from what I've seen firsthand, working with my traders and trader friends, that the biggest flaw that I saw was trading with incorrect lot sizes. Account balance will plummet. Trading with higher lot sizes more than you should will only cause you to fall from your high wire like an inexperienced trapeze artist. Sooner or later, you're going to fall into a bad streak of more losses than wins, causing your account balance to plummet. The correct lot sizes are critical to your success. You may be surprised, but choosing the correct lot size when you trade is more important. Again, this is controversial, but choosing a correct lot size is more important than having a stop loss in the first place, having an initial entry that goes positive, in other words, that goes in your favor and you start making money in the beginning of your trade, understanding price patterns. Trading with the trend, you could be trading with the trend and still have a bad result. Having a generally good textbook knowledge of the Forex business. So even with all that, you could still end up losing big money with incorrect lot sizes. Case study number one. Now, I've got two different cases to really illustrate what I'm talking about. Okay, here's case study number one. You fund your new account with $1,000. So just bear with me. Read this slowly if you have to. You can pause the video at any time. Just click on the pause button below and reread it over again. You fund your new account with $1,000. You decide to apply a self-imposed risk factor of 5%. That's of your account balance. So we're talking your risk factor is 5% of the $1,000. You are now risking $50 for every losing trade. So in case a trade goes against you, you're basically saying to yourself, well, you're going to risk $50. As a new trader, you're confident and you decide to trade with 5 mini lots. So that is $5 per pip. So for every pip that it moves in your favor, you're going to make $5. For every pip your trade moves against you, you're going to lose $5. Okay, so as we continue, you're not watching your computer screen and the trade quickly goes against you by 20 pips as there's a sudden spike in price movement. Let's say that you even correctly placed the 20 pip stop loss. Good for you. I'm glad you did that. But you are now stopped out with a loss. Okay, since your trade stopped you out at 20 pips, you have lost $100, right? You agree with me? 20 pips times $5 is $100. However, remember at the beginning, you basically had given yourself a 5% risk of $50. And instead of your loss being contained to only $50, this one losing trade is now ballooned to a major 10% loss on your account balance. Your balance, instead of being $1,000, is now down to $900. So do you see how this can happen and how quickly your account balance can change? So instead of having a $50 loss, which you had implemented for yourself, at 5% of 1,000 is 50. In fact, you did have a stop loss, so that was correct when you're trading. How and you watched your trade go and hit your stop loss, so you're stopped out. But the problem was you were trading with $5 per pip with 5 mini lots. A little bit too high there, well, a lot too high, and instead of losing 50, you ended up losing 100. Now, the important lesson. Now, what if you had three important trades in a row without adjusting your lot size? In every case, you did use a stop loss, which is what I always advocate. I mean, everyone should use a stop loss because that is the smart thing to do. However, you're stopped out for all three trades at $20, 20 pips each. Okay? So follow me. You do three more trades, each had a 20 pip stop loss. You're stopped out all of a sudden on a bad streak. You're in a bad losing streak, three losing trades in a row. Remember, you're still trading with 5 mini lots each. Suddenly, you have lost a further $300. Three losses times $100 per trade, right? Per $100 loss per losing trade. And your account balance is now down to 600. So you started off with $1,000. You're down to $600, which is now a full whopping 40% less than your original investment of $1,000. Okay? So do you understand what's going on? This example is typical for most traders. It can happen rather quickly just after a few trades. The problem is you want to earn fast and easy money, and you don't see the critical flaw in your trading until it's almost too late. Even if you are aware of this flaw, I've discovered that many traders are just too stubborn to change their trading style. Okay? Now, let's look at case study number 2. Your newly funded account has $400. You don't have a lot of money to spare, and that's okay. Not everyone has lots of money to fund a brand new account, yet you're eager to make lots of money with Forex. You start trading, and in the beginning, you are rewarded with some profits. Hey, good for you. Your account grows quite quickly from $400 to $700. Hey, that's great. So all of a sudden, you've increased your initial investment from four, and it's now $700. However, you're not really sure why you're having good success, but you're excited, so why stop now? You're a confident person, right? You've always been confident and sure about a lot of things in life and believe that you can make big money really quickly. Next, you start to quickly take one trade after another, and this is called over trading. Sound familiar? Without knowing better, part of the reason for your beginning success was due to trading with very high lot sizes with lots of luck thrown in. Okay, and that's important. I did say lots of luck thrown in because I found that most traders who open up a brand new account are pretty lucky in the beginning. They actually do gain lots of money and then they become overconfident, and that's when things start to go wrong. Suddenly, your next trade is a loser. Okay, so again, follow me, everyone. You are now trading 8 mini lots, $8 per pit. Wow, eight mini lots. I'm sure many of you have traded even higher than that. Once again, you had correctly determined your stop loss, this time to be 30 pips, and it was correct. It was below a previous swing low, but the trade stopped you out. Okay, good that you used a stop loss, but wait, you have just lost $240, right? $8 times 30 pips is $240. You don't realize this, but this is a 34% huge loss on your $700 account balance on one trade. Your new account balance is now down to 460. Okay, well, so far not too bad. You started off with $400, remember, and you're still you're still in a winning position. You have $460. But guess what happens next? Yep, you make another buy trade within minutes of being stopped out, determined to make up your loss. This time you calculate the stop loss to be about 40 pips below your entry. Okay, 40 pips below your buy entry. You reckon that price cannot go that low against you. We've all thought that. Now, we've sometimes put a stop loss way further further away from our entry than we thought we should, but we want to be safe, right? Better be safe than sorry. So you reckon that price cannot go that low against you. Price, however, goes up at first and you are in profit. Hey, that's good news. You're really excited. So you get yourself a cup of coffee. You excuse the time that you're spending at your computer, and perhaps 15 minutes, 20 minutes, half an hour. You come back and find that price starts going against you. You are now frozen to your screen, sitting on pins and needles. Before you know it, price has gone down by 30 pips. Okay, you say to yourself, it's not yet hit your stop loss, which is 40 pips, but you're in a suspended trance. You have a hard time you have a hard time really doing anything. You're just kind of staring at your screen, suspended and you're suspended, kind of frozen, not knowing what to do next. You continue to watch your screen and an hour later, price continues to go lower, finally hitting your stop loss at 40 pips. Okay, so you now have lost another $320, almost 70% of your $460 balance. So remember, we were at $460. We've now lost 320, okay? And we're down to 140. Your account is now $140. You can't believe it. Trading can be so unforgiving and cruel, right? You started with $400. That's how you funded your new account, and shortly thereafter, or not too long later, you're now down to $140 with a tiny account balance of 140. And this now becomes really interesting. You're down to $140. You find that margin requirements of your broker will only allow you to trade with micro lots, hindering your ability to make any money, certainly not fast and easy money anymore. Okay, because when you have so little in your account, in a real live money account, the broker will actually only allow you to trade with micro lots, most likely one, two, three, maybe if you're lucky, up to four micro lots, which is 10 cents a pip movement for a micro lot. You start to lose more money as you find that your wins are less than 50% of your total trades. Wow. You're confused, not really thinking clearly anymore. In fact, you're blaming all your woes on your incorrect entry decisions and stop losses being too far away from your entries. That may be part of the problem, but all along, you should have been thinking about using the correct lot sizes to trade with. Even though you're now trading with micro lots, your account balance very soon goes down to below $100. You're ready to give up. Sound familiar? Important lesson. This last example demonstrates a real common problem for most new and old traders. They concentrate their efforts on entries rather than on risk management. As mentioned, you can be the worst trader in the world, but still be able to sleep at night knowing that there's a real, simple solution to limiting your overall risk. Slow down your losses. Okay, here is one of the important things. Give yourself enough time to become a better trader. In the beginning, you want to implement proper risk controls to help you slow down the amount of money you're losing. Yes, you will lose money. All traders lose money in the beginning, but you want to slow down the process. You will have to become a better trader and learn how to take good entries at some point in time and choose your stop losses more wisely. This will come in time with more practice and experience. However, if you start losing all your money too quickly, you will run out of time before you can improve your overall trading. It's that simple, folks. Learning is a process. Start to eliminate perhaps your biggest trading flaw first before you can do anything else. And you can do this. How much risk? Well, before you even take your next trade, first consider your overall risk as a percentage of your account balance. Your overall risk determines the lot size you can trade with. Because you will lose some or many trades, remember this is a fact, you must draw the line in the sand. This is the line of defense where you promise yourself the absolute maximum amount of money you are willing to lose on any one trade. Period. I highly recommend using a risk percent of no more than 3% of your overall account balance based on my personal one-on-one sessions with students. Here's just a quick guideline. You can see if you have $200 as your opening account, 2% maximum, I would suggest, maybe not even that, but we're basically talking $4 a trade. So if you lose a trade, you cannot afford to lose more than $4. I mean, we're only starting with 200. If you fund your account with 500, again, 2%, maximum risk of 500 is only $10. $1,000. If you fund your account with $1,000, 2% risk is $20. So on a losing trade, you're going to lose no more than 20. It gets more interesting as you fund your account with higher amounts. Let's say you funded your account with $5,000. 2% is 100, but that's still quite a bit. I actually would suggest 1%. So on a $5,000 account, you should still risk no more than $50, and you're going to be able to sleep at night. On a $10,000 account, again, if you're risking 2%, this is $200. Better is 1%, which is only $100 per loss. So ask yourself, if you could sleep comfortably at night knowing how little money is really at risk if you just follow this advice, okay? Now, how to calculate lot size manually. Step one, determine your overall risk, okay, of your account balance. Determine where to place your stop loss in pips that defines your line in the sand. So your stop loss could be 20 pips, 30 pips, 40 pips. Step number three, use your crosshair tool to calculate the number of pips to your stop loss from your entry. Now, this takes only a second and has to be done before every new trade is opened. Okay, and this is we're talking about a trading platform called MT4. That's kind of one of the important world standard trading platforms. You can trade forex on it. Most brokers in the world who trade forex or will have the MT4 platform as to offer to you. Okay, now we're going to take a look at a chart for some examples using the crosshair tool. Okay. Okay, here we're looking at the Euro USD daily chart. Okay, you can see price has gone up, down, and looked like price kind of went up and touched the resistance here, and let's say we had a sell limit order up in this zone over here. This is like a selling zone. So, and then we watch price go down. So, what to actually look at how to use the crosshair tool to establish your stop loss and where that goes. Up usually above your chart, either on the left side of your chart. This is called a menu here, a toolbar. This is the crosshair tool. You would click on that. Okay, you can see that. You would click on that and just there we go. We've got the crosshair tool. And let's say if you were taking a sell trade down, in this case, I would have had a stop loss, let's say above the previous high here, swing high, or above this gray rectangle. So my entry was right here. See how I'm dragging my crosshair tool up. And in this case, can you read the first two numbers? It says, well, the middle numbers say 645. Okay, so it's just the first two numbers. This is 64 pips from my entry. Okay, you just ignore the third number, 64 pips. And in this case, I would have a stop loss of 64 pips. Obviously, price went down and I made some money there. Price never did go back to stop me out. Let's look at another chart. British pound. Here is the LEOD. And take a look over here. If I want to take this trade right here after this candle, you see this candle closed above the yellow here, my stop loss would have been back down here. So my entry is right here. After this one big up candle, I enter at the next candle right there. My cross edge tool, I go up above the chart, click on that, I click on that, drag the crosshair tool down, and here's my entry. Okay, there's my entry. And I just drag the crosshair tool down, take a look at the middle number. Okay, and my stop loss would be just below the yellow line. So you can see it says 220, right? Okay, let's go up just a wee bit. So right there, 208. Can you see it? It says 2083. It's the first three numbers in this case. So my stop loss on the British pound USD daily here would have been 208 pips. And a lot of you, I know what you're saying, 208 pips. My goodness, that's a huge stop loss. But that's what it is for this trade setup, okay? Right now, the exercise is just showing you how to use the crosshair tool. So again, anytime you want to place a trade and you want to place a stop loss, so let's say here, we're taking a sell trade, okay? And just really quickly, okay, so we're going to take a sell trade on the this candle closes below the trend line, so enter right there. I'm taking my mouse up to the crosshair tool. It's with the X, okay, or with the big plus sign. Click on that, okay, and drag the tool down. There we go. And let's take a look. So my entry is there, right above the top yellow line, so it looks like 244 pips. But I'll do that again so you can see that again slowly. So here's my entry, there we go. You see the middle number after the zero is 2500. So it's just the first three numbers. That's 250 pips. Okay, 250 pips for the stop loss. Okay, now I'm going to go back to the slide presentation. Okay, the next thing is, again, we're calculating the lot size manually here. The step 4 is plug in your numbers. So if your account balance was $1,000, as this example here, and your stop loss distance from your entry is 30 pips, okay, then your overall risk is 2%. Let's say you decided 2% of your account balance, which in this case is $20. You divide your risk by the number of pips, in this case $20. You divide that by 30 pips and you get 0.66 or 6 microlots. You look at the first number. You always round down, never up. Okay, so in this case, we can only open up a trade with 6 microlots, which means 60 cents a pip movement if we have $1,000 funded in our account. And that's only if you said that you designated yourself that you're going to trade with only a 2% risk of your overall account balance. Okay, so do you see how that works? Now, you will now only be risking approximately 60 cents That's 6 microlots times 10 cents each, because each microlot is 10 cents a pip movement. So if the trade goes against you by 30 pips, right? If the trade goes against you and you get stopped out for the full 30 pips, which is what your stop loss is, you're only going to lose $18 on a $1,000 account. Okay, so do you see how that works? Ask yourself if you could sleep comfortably at night knowing that this small loss is not going to deplete your account. Now, let's say you have $1,000 in your account, but the stop loss is actually 200 pips, right? So in this case, what we want to do is we want to, and what we're saying is your overall risk is let's say your overall risk is 2%. So $20, you're risking $20, but it's a $200 stop loss. Well, when you do the math and you divide your $20 by the 200 pips, you only get zero point 0.1, which is 1 microlot. So it's only 10 cents. Again, you're risking a very small amount. And again, if the trade for whatever reason goes 200 pips against you and you get stopped out, the most you're going to lose is $20. So do you understand how that works? So even with a huge big stop loss, the important thing is trading with the correct lot size. Now, the other thing, of course, is you're not going to wait for the trade to go against you by 200 pips. I mean, you could always close the trade if the trade goes against you by half of that, 100 pips or whatever. So you may only lose $10 and then start over again looking for a better entry. Okay. Now, here's the next thing. I've got something really, I've got a free gift for you using a quick link to calculate your lot size. If you're just bad at math, lazy, or you just don't, or if you just want a better and faster way to calculate your correct lot size, then I've got a gift for you. Here's a quick launch link for a lot size calculator, and it's from babypips.com. I'm sure you all have heard of this really great website to help you learn Forex. I will show you how to put this link on your desktop for quick, easy access. Use this every time you place a new order. So this way, it's on your desktop. You don't have to do a manual arithmetic to figure out your lot size. You don't have to divide your risk by your pips. You got to go to this website, and if you want, just put this video on pause and write this down. http www.babypips.com tools forex calculators position size. Okay, but I'm actually going to show you how that works. Okay, just a second. We're gonna go to the website. Okay, I've navigated to the website. You can see this is babypips.com right here. Take a look on top, www.babypips.com, Tools Forex Calculator. You will need this information up here in the address bar. Okay, this is the address bar, and you can just Google that if you want, or just Google babypips.com calculator, position size, whatever. With those keywords, you'll get this page. Okay, and we're going to show you the actual calculator. Here's a bit of a brief description, how it works, but this is really neat, guys, okay? Hold on. Okay, just below the written part here, you can see this calculator. It's really neat how that works, and it's really super simple to use. Again, it's account currency, so your account will generally be funded with US dollars or Canadian dollars if you're using our Forex broker. You would plug in your account balance. Let's say you have $1,000 in your account. So your account balance based on your trading, if you're winning or losing, will go up or down. But put in your correct account balance. It may be 1,000, maybe 800, maybe 756. It may be 300. Doesn't matter what it is. Whatever your account balance is, plug it in. Your risk percent is important. Remember, this is the line in the sand that you're going to give yourself. So it's either 1%, 2%, and I suggest no more than 3%, but let's say it's 3%. So I'm going to plug in 3. Now let's say your stop loss. You've got a big stop loss. Let's say 80 pips. Okay, let's just plug that in, 80. And your currency pair. Now this is important. See, there's a drop down list. So you're trading the Euro USD, okay? If you're trading something else, change it. And then just click on calculate. And there you go. Look at that. Bingo, bango. The amount at risk, and this is in clear, simple English, okay? Amount at risk is 30 US dollars. You're risking $30 of your $1,000 account, okay? That's your account balance. You're risking $30. Your position size, you're actually trading, it's telling you you can only trade maximum 3,750 units. And remember, there are 1,000 units on a micro lot, okay? So 3,700 units is approximately 3.7 microlots. So it's telling you you cannot trade any standard lots, right? That's $10 a pip movement. You cannot trade any mini lots. It's zero again. So that means you can't trade $1 a pip movement, and it's rounded down to the lower number automatically for you. You can trade 3 microlots. So 3 microlots, that's how you open up every position if your account balance is close to 1,000. Now you don't have to use this calculator if your account balance is always like it's pretty close to 1,000. However, if it goes up marginally, let's say you're making some pretty good money. So let's be positive for change. You now have $1,500 in your account. Okay, take a look up here. Your account is $1,500. Okay, so you're making money. Your risk percentage is still 3%. Always keep it 3% or lower. Your stop loss, let's say you even have the next trade you're going to open up has 90 pips, okay? 90 pips. You're trading the Euro USD, your account at risk, okay? Let's click on the calculate. Okay, you can see these numbers automatically changed. The amount of money at risk now is $45 of your 1,500. So now you can actually risk more, which means you can trade with a higher lot size, and that's great. So remember, when you're making money, you can trade with more or higher lot sizes. If you're losing money and your account is getting lower, 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 then you will only be able to trade with smaller lot sizes. So in this case, $45 at risk. It's telling you, the calculator is saying that you could actually trade 5,000 units, which is really 5 microlots. So there you go. As your count is increased to 1,500, you now can trade with higher lot sizes, 5 microlots. So for every pip that your trade goes up, like in profit, you're making 50 cents. For every trade that you're losing 50 cents. But this is a clear, simple management plugin that I want everybody to put on their desktop. And that's the next thing we're going to do. We're going to show you how to do that really quickly. Okay? Okay, everyone, this is my desktop, okay, and I've already got the Baby Pips lot size calculator here, right? But the very first step, and this is really super simple, everyone should do this. So this is, by the way, this is the quick link button. And if you actually click that, I'll just do that really quickly, okay? Double click, it'll open right to that page. Let's take a look. It should open up to the Baby Pips position size calculator. Waiting. Okay, you can see that it just opened up, and there it is. You can use it. You can plug in your numbers instantly. Okay, so that is the terrific thing there. And let me just move that over. So that pops up automatically. So the very first thing is you're on your desktop here at an open space, somewhere where it's empty. Right click. Okay, so right click. You'll see this pop up. Click on new with your mouse, new, okay? And what you're going to do is you're going to click on shortcut. You see right up here? So you're going to, with your mouse, click on shortcut, okay? And just a second. Okay, this window will pop up. It says, what item would you like to create a shortcut for? Now, this is terrific. Here in this space, you go back to your Baby Pips page, where the calculator is. You right click on in the address bar, drag your mouse, and you're going to copy and paste it. You're going to copy that address from the Baby Pips calculator, and you're going to click on here and then paste. So copy and paste, okay, and let's do that. Okay, I copied it. I'm going to right click paste, there it is, the Baby Pips calculator. Okay, click next to continue. Okay, I've done that. And what you do is just type in a name for this shortcut. So once the shortcut link appears on your desktop, you're easily going to find it. And I've named mine. I'll just move this out of the way. See right here, I just named it Baby Pips Lot Size Calculator. Okay, so you can type in here baby. You can just type in Baby Pips lot size calculator or whatever you want. And then the last thing is click on finish right here at the bottom. Okay, click on that and bingo bango, instantly that this just produced right over here. You see this? Baby Pips lot size. So the next time you need to quickly access a calculator, and this is one of the best ones I've come across. It's really easy, simple to use. Just double click on that if that's how your desktop works, or when you click on something, it's a double click in my case, and it'll instantly open up the page and you're ready to use the calculator. Okay, if your stop loss is too big, and this is really important because I get this question all the time, right? First of all, you should always use a stop loss, and I think some of you traders know what I'm talking about. If you've had some major losses, chances are you used the incorrect lot size to begin with, and then you probably were not stopped out. Maybe you were, but you were just using incorrect lot sizes. So I often get traders calling me about that or emailing me about that. Don't worry about this, okay? If your stop loss level is correct, this is my advice. If you think your stop loss level is correct, even if it's 80 to 100 pips or 150 pips away from your entry, and this is for end of day trading, of course, it's going to be a lot lower if you're intraday trading. But if you're trading at the end of the day and placing a trade in the evening and looking to see what happens the next day, you may have a very large stop loss. But the answer is really simple. Use the correct lot size. The lot size will automatically give you a restful solution so that you will be able to sleep at night comfortably, because it's going to tell you automatically that you can only trade with small, very tiny micro lots. Okay, that's a really, really huge tip. Now, important. Remember, the best traders in the world have losses. Even if they have the best educated entries and stop loss levels, you can't control price movement, but you can control or limit your risk. Okay? Another stress-free trading tip, and this is really simple. Scale in your lot size. So the next time you take a trade or any trade, and it's telling you that you could use 4 microlots or 8 microlots or 2 mini lots or 5 mini lots or even a standard lot or 2 standard lots or whatever, always open up the next trade with just one lot. And if the trade goes in your favor, if you're in profit after a while, then you can add another lot or another couple lots up to your allowable lot size. Okay, so this is called scaling in. So this is kind of a conservative approach to trading. You're never going to be wrong if you start every single trade with just one or two lot sizes much smaller than what the calculator is telling you that you can use. Okay, so there's a great tip. And another final huge tip, and this is part of your overall money management system. Come up with an overall risk that you will allow yourself on a weekly basis. Okay, so on a weekly basis, let's say as an example, you limit your weekly loss to 10% of your account balance. That means stop trading for the week once you lose 10% of your money. Even if you only took a few trades, right? Now you may say 10%, you may say 8%, 6%. I don't know, what's comfortable for you. But if you lose your critical, and I call this, by the way, I call this my critical dead stop. If you reach your critical dead stop and you lose up to your 8% or 10%, you need to stop trading for the week. I mean, you need to stop trading immediately and give yourself an emotional rest. This is critical, guys, to your success, okay? Then you can contact me, send me an email, and I'll see if I can help you further, or at least give you some words of encouragement. Okay, your benefits. Well, we all know what the benefits are, but I'm going to repeat them. The important thing about correct lot sizes, it will keep you from having small losses become huge losses. That's one of the important two rules, right? Isn't it? Keep your stress level to a minimum. Correct lot sizes will keep your losses from getting out of hand long enough for you to improve your trading. Remember, we want to slow down the amount of money you lose. Keep you focused on the business side of trading as a process, not as a quick, rich solution. Trading should not always be like a quick, rich scheme. Keep your trading mechanical. So using the correct lot sizes teaches you and disciplines you to keep your trading mechanical, not emotional driven, so that you're not choosing whatever lot size you want. It's actually, if you use the lot size calculator, it's going to tell you exactly what lot size to use that should be that should keep you and help you sleep at night much better. All in all, using the correct lot size will make you a better trader instantly. I guarantee that. So this is the end of the presentation. Probably went a little bit longer than I wanted to, but you know what? Even though some of the information is really basic, I mean, I've met quite a number of traders personally, and I cannot believe how much money some traders have lost just based on the incorrect lot sizes and some of the other flaws in their trading. So hopefully this is one of the best lessons I can offer you. Read this over again, watch this video several times, use the lot size calculator by Baby Pips, try to get it on your desktop and actually use it before you enter every trade. Okay, so good luck, and I know you guys are going to do better. The main thing is stop losing money, and the next video is going to be really interesting. We're going to touch upon another key point of your trading process. So take care. We'll talk to you again. Email me if you want, and we'll talk to you again soon. Bye for now.